It's UPBOptionMillionaires.com. It's Monday, October 12, 2015. S&P 500 futures are flat. It was a massive rally last week on the heels of a strong reversal off the Carl danger ahead lows of 2 Mondays ago when stock markets around the globe were falling. We had a sharp reversal to the upside. Leading the way has been some of the stocks been beaten down over the last 3 to 6 months. The junk in the trunk is rallying and helping to pull the broader indices higher. We broke through trendline resistance last week. We had the Fed minutes right here helping to boost stock prices. We had Fed minutes here back in August. That was helping to exasperate the selling down to the crash lows. And then we had a Fed meeting in the middle of September of more indecision. Actually, the uncertainty helped come back to the lows that we saw later in the August period. If you look here, are we consolidating for a breakout? One thing that was really pointing or helping to give the clues about where the market's been heading over the last 2 months has been crude oil, because it bottomed back in August and has been putting in a nice consolidation pattern. If you look really over the last couple weeks, crude oil and the stock market has almost been going lockstep. They've been dancing to highs here, and you can see crude oil starting to break out. If you look, though, from a long-term perspective, you go back to the 20-year weekly chart, still looks very bearish to me. If you draw a trend line across, you come all the way across here. Look at this. This goes back 10 years, and we're still not even close to getting back up to those levels, so we need to break above that. Looks bearish to me, but hey, you know, this market could rally, continue to rally until it's overbought. And when it's overbought, it could just keep getting overbought. One stock to watch. Apple broke above the 110 level, but if you look long-term chart perspective, I continue to bring this up, the fact that it's putting in a nice head and shoulders topping pattern. It was a great buy at the bottom here in May of 2013. Nice W bottom. We broke out of various flagging formations, but now we have a nice topping pattern. We did bounce off support at 110 and trendline support here, but looking poised to break under 100. I know this morning Morgan Stanley, one of those big analysts, are out raising the target for Apple. We'll see if that does anything for the price short term, which it probably will, but longer term still looks rather bearish. We have Google earnings coming up. Google's chart looks terribly bullish here. This was the last earnings report. Some of the options back then turned from 10 cents to $100. One of the more historic option moves that we've seen in a long, long time. We're setting up again, to me, looks like a very bullish move to the upside is coming for Google. So earnings report this time around could send it another spike to the upside. Amazon also looks terribly bullish here. Up 30 bucks away from its all-time high, but looks poised to break up to the $600 level. A couple other stocks to watch. Caterpillar's been breaking down, but came back up over the 70 level. Is this a dead meow cat bounce, or is this something more constructive? You go back, this is a 5-year chart. Go all the way back 10 years. You can see Caterpillar's broken below, but did have a similar reversal once it hit its highs off the financial crisis back in the middle of 2011. And that candlestick was a massive one. We're not even there yet. So if this is not something more drawn out that's going to lead to $50, $45 a share, we could witness a sharp reversal to the upside. So just something to be wary about. I don't think that's the likely scenario, but you never know here in this market that's fed from central bank action. Look at TLT. Bounced off support at 120 here. Looks poised to head up, especially if interest rates remain low. We're going to have still the flight. Where's the money going to go? Into a stock market that's, you know, just crashed a couple months ago, or the bond market, which of course is fed from overseas as well. In Europe, when we have yields and bonds overseas for some of these countries that were almost bankrupt a couple of years ago, yielding less than here in the U.S. You know, something's rotting in the world, and that money's going to flow here to the U.S. Something else to watch, the VXX, which of course we know over a long-term time span, it's like that zero hedge quote. On a long enough timeline, the VIX will go to zero. And that's what it seems like the case here, but you can see it breaking down. Each time it's broken down, it's headed down to record levels, and it's a distinct possibility we're going to see that again. And something else to watch this week, we have earnings from the banks. JP Morgan Chase coming out with their earnings, I believe, after the bell in the middle of this week. Something to watch. It's smack in the middle of a really nice range here. You can see back at the crash in August actually broke through trendline support. I was talking about that being a great buy spot. It actually came through it and broke through it briefly on the paint. But setting up here for a move either up to trendline resistance at 70, which I think is the more likely scenario, and I think the earnings report's probably going to ignite the shares back up to about 65. All right, UPB here. I'll see you in the chat room at OptionMillionaires.com. Hope you have a wonderful Columbus Day. I know a lot of people are off from work, so it should be a pretty quiet session, and we'll see how this week progresses. Is it going to be more rally to the upside? Are we going to continue to break out of this pattern that looks a lot like the one in 2011, which would imply a pretty significant rally to the upside? Or is this just another head fake, short covering rally that's going to be an ultimate great sell the rip opportunity down the road? I'll see you in the chat room. UPP here. Goodbye.